And at the end of the meetup, he pointed me out and he said, "You need to stop with the analysis paralysis and actually take some action." And I thought, what? Back then, Jeff can go into it, but back then it was like 2015. So it was not long after the global financial crisis. And there was a lot of distressed notes, mortgage notes. And he was buying the notes and turning them around to get them paying again. And so I really like that aspect of it, the being on the funding side of it, like more of the finance side, rather than like, buying properties and getting your hands dirty, fixing and flipping properties and stuff. So at one of the meetups, I got talking to some people that they were rehabbing properties, and they were like, well, if you have some money, we could use the money to help us fix up the properties. And I was like, and we'll pay you a good return on your money. And I thought, well, that's actually not a bad idea. And I discussed it with Jeff, and he said, yeah, I mean, I've done that before. That's, as long as you're in a good position, as long as you've got security, against the property, like a promissory note or whatever, a security deed, warranty deed against the property, then I guess it's a deed of trust in Seattle. Then that's the way to, just go ahead and do it. So that was my first foray into it. I used a HELOC that I had against my primary residence, took some money out and lent it to these people that were fixing up a house. So that was my very first investment.